Good day, everyone. Welcome to ATRAM Radio. Today, we will be having an interesting discussion about the ATRAM Corporate Bond Fund, which has proven to be a very strong performing fund in these exceptionally uncertain times. Joining me today is none other than the co-manager of the fund, Mr. Lodovico Ulpo. Hey, Devi, welcome to the program.
Hi, DJ. Hi, everyone.
To briefly introduce Devi, he has 9 years of experience in the buy-side industry with core experience in the fields of fixed income and credit research, global macro trading, credit events, relative value strategies, and asset management. He is a Chartered Financial Analyst or CFA charter holder, a Certified Financial Risk Manager or FRM, and a Certified Public Accountant. Hey Dev, thanks for joining us today.
Glad to be here.
So now let's dive right into it. What are the opportunities that the ATRAM Corporate Bond Fund invests in? Please do share the strategy with us and what sets this fund apart from other fixed income funds.
Sure. The ATRAM Corporate Bond Fund invests in the strongest Philippine corporate bond issuers in the Philippines. With more than 50 issuers in the Philippine corporate bond space, part of our active management is really to select the strongest 15 to 20 issuers to be able to provide that portfolio optimization or diversification and yield maximization as well as portfolio stability.
So the aim of this fund is really to invest in the strongest 15 to 20 companies, which means it provides more stability. And also because we're investing into multiple issuers, it means diversification as well.
That's correct, DJ.
So what are the benefits of holding that type of fund in this market environment? And how was the fund allocated last year and how is it positioned this year?
Sure. So the fund has performed relatively well this year. It has performed positive 0.3% in an environment where bond funds are usually down anywhere between negative 3 to negative 5%, while equity market is down anywhere between negative 10 to negative 12% year to date. For full year 2022, we're expecting to make anywhere between 1.5 to 2.5%. And that is really actually good given global markets, global equity markets, global bond markets are down for this year.
That's amazing. We're expecting about 1.5 to 2.5% in a down market like this. So where, as you said, global equities, global fixed income, and even local equities and fixed income are down. So how have you designed the fund so that it would provide a positive return in this negative environment?
We have been doing our portfolio construction relatively well. So basically, we are doing our reinvestment program over the years. We have carefully planned for that. Diversification as well, selecting the best stable issuers, and the active management of the fund. So given the increasing rate environment, we are able to take advantage of this by having about 15 to 20% liquid funds in this rising interest rate environment to be able to protect the portfolio. So that liquidity will be able to deploy once we see some stability in corporate bond yields, which is anywhere between 6 to 8% right now. So once yield levels have stabilized, then we will deploy that liquidity.
So we're looking to lock in around 6 to 8% of yield, and that's a pretty high yield, especially during a negative environment like this.
Definitely.
So why should people consider investing into this fund, and what type of investor is perfect for this fund?
Sure. So these are really for moderate investors, those that aim to maximize portfolio yield, the diversification, and stability. For those investors who want to participate in the Philippine economic growth story without the necessary portfolio volatility, which you usually encounter in other asset classes.
So with this fund, you're still able to participate in the overall recovery of the Philippines, despite the fact that equity markets are going down at the moment.
Yes, that is true.
So please share us the outlook on Philippine bonds and Philippine fixed income within the year and the return expectations moving forward.
Sure. So for this year, we expect interest rates to go up as global monetary policy normalizes from previously accommodative levels. Inflation will very much drive interest rates further higher as central banks and broad markets initiate the move to further higher the policy rate. In this environment, you would like to expose yourself in actively managed funds such as the ATRAM Corporate Bond Fund, which will help provide your goals of portfolio yield and stability, despite the very challenging market we're facing today. For the ATRAM Corporate Bond Fund, again, for this year, we believe we will be able to deliver positive total return of about 1.5 to 2.5%, with the broad risk significantly better managed relative to other asset classes.
So this type of fund, in general, actually, is a good type of fund in a very volatile environment, on a very negative environment.
Yes, that is true.
And that was such a great conversation, Dev. Thanks for sharing your insights. And that's a wrap for today's session. If you want to know more about the ATRAM Corporate Bond Fund and other ATRAM funds that we offer, you may visit our website, www.atram.com.ph. Thank you for tuning in, and we can't wait for you to all join us again on our next episode. Thanks, Dev.
Thank you.